What's up, guys? Welcome back to the Angelo Archives. I know it's been a while, but I figured I'd post this video because a lot of people have been asking me questions on how they can make money online and what I personally do to make money online. Despite all this coronavirus pandemic like bullshit, people having to stay at home and whatnot. So I tell them that simply I trade. And what do I trade? I trade index options like the SPX and NDX because they trade bigger and they have more expirations that expire more often. S&P, that has 3 expirations per week, and NASDAQ and Russell 2000 have 2 expirations per week, whereas classic equity options expire weekly, just once a week. I have to preface this and state that this is not financial advice. I'm not a financial advisor, so do not take any of what I say seriously. I am just here to outline my strategies and what I do to make money when trading. Just to give you guys a little background, I was a full-time poker player for several years in Las Vegas before transitioning over to YouTube. And now, as you may know, I'm running the channel They Will Kill You. But it wasn't just me that transitioned to YouTube. It was a lot of my poker friends too. And you might know some of them, like Paul from Pablito's Way, and Adam from Epic Wildlife, Renee from World List, and David and Katrina from Origins Explained. Now that I'm running They Will Kill You, I've been able to treat poker as just a hobby, which is why we got into it to start out with. But ever since then, I've still had an itch to sort of gamble and take on more risk, because I'm a degenerate gambler like that. So instead of poker, nowadays I get my fix from Wall Street. Okay, so now I'll jump into the strategy of it all, but do keep in mind that there are going to be a lot of big terms thrown your way. To understand this, you're going to have an understanding of options and how they work. Okay, so here's the opening bell. I will go get started in my strategy right now. Right now I'm looking at the options that are expiring today for the S&P 500. Anyways, with the amount of big terms that are being tossed around, if you're not familiar with it, I do highly recommend that you go look it up. And I don't care to explain it myself because with the wealth of knowledge that's available right now, you can easily teach yourself. Okay, I'm just going to screenshot that for later and I'll explain why in a moment, okay? But yeah, you can easily teach yourself everything you need to know about options, at least the basics of it. 95% of what I learned I'm self-taught, and the other 5% I found a mentor and he was able to help me out. Also, with the information that's available online, it's all free and you can easily find it on YouTube or just a quick Google search, and I really don't care to explain much of it at all myself. I'm here to explain my strategy. Okay, so now with that being said, the basis of my strategy is focused around the implied move and essentially the break-even points if you were to sell a straddle. The reason I do this is because price generally respects these break-even areas. So let me show you what I'm talking about. So I screenshotted the prices that options are going for and set up a calculator to find out the break-even prices. So I'll input that right now. Currently, or at market open, the S&P 500 was trading at 25.70, and then the at the money calls were trading for 28.50 and 30.20. So I'll put that in. And what we're doing is finding the midpoint price between the bid and ask, and then we'll do the same for the puts. Okay, so 29.70 and 31.90. And what that's going to do is give me the break-even price for the straddle. And I will mark that on my graph right here. And I will mark it right here. Okay, so as I said, Price will generally respect these areas as support and resistance. Now, once it reaches one of these break-even areas, I just call them the lower bound and upper bound, then I will sell a vertical call spread when it gets up to this resistance area, or if it hits support, then I will sell a vertical put spread. So essentially, at the end of the day, I'm holding an iron condor that I've sold. Now, the reason why I wait for price to approach these areas is because you can collect more premium when it's closer to these areas, and you can sell strikes that are further out of the money, meaning it gives you more room for error. And then, since I'm trading the contract that expires this same day, then I let the options expire worthless and I collect the credit at the end of the day. Now, there's two reasons why I trade the contracts that are expiring the same day. One is that it allows traders with less than $25,000 in their accounts to not violate the pattern day trading rule, because at the end of the day, the options expire worthless and you get your options buying power back the next day. Also, secondly, is because the market can gap up and down so drastically during the overnight session that I don't want to wake up the next day and have one of my sold spreads all of a sudden be in the money due to a big gap up or gap down. Okay, so as you can see here, I've calculated the break-even prices of a straddle from the market's opening prices, and I'm going to keep calculating them throughout the day when I find that it's a good time to sell either a vertical call spread or a vertical put spread. Now, I use these levels to manage my risk, and some might argue that the risk reward just isn't there, like you might be risking 5 to 1. But I do believe that I have an edge with my technical skills, making the risk reward that much more appealing. I'm also willing to close out a position at a loss if it gets too far into the danger zone, so I'm never letting a position expire in the money at the end of the day. Now, in the case that I have to close out a position in the money, then I will re-enter at a further out strike and collect more credit to make up for those losses. Alright, so as far as technical indicators goes, here I have stochastics. You'll see my inputs here are 636 on the KD and smooth respectively. I've got RSI, and I've got a proprietary indicator from my mentor, who, if any of you guys are interested, I can provide you the info for that. On screen here, I have the EMAs and 2 simple MAs. So orange line is a 10 simple, white line is 200 simple. We got the 21 exponential in yellow, we got the 55 exponential in green, the 100 exponential in cyan, and the 200 exponential in purple. So I use these indicators in confluence with one another to help confirm my decisions and make better choices. I also use them to help manage my risk along with these break-even areas. But I must say that at the end of the day, the most important thing to me is still price and these break-even areas of the implied move. To chart, I'm using TradingView, and then to actually trade, I am using Thinkorswim by TD Ameritrade. Now, with market open, I use stochastics on the futures, the E-mini S&P futures contracts, because there's so much action pre and post market that it makes for smoother momentum oscillators, and whereas like if you're using momentum oscillators with market open and close, a big gap up or a big gap down can essentially render them worthless, because big gaps in price action will mess with the calculations. Okay, so another indicator that I use is some of the international markets. Looking over here, we got Germany, Amsterdam. This is Hong Kong, Japan, and Australia. Fortunately, these markets open way earlier than the US, and so you can sort of get a general consensus of where the US markets will go. I'm not saying this is 100% accurate, but it gives you an idea of it. So today it's going to be hard because the European markets are trading up, whereas the Asian markets are trading down and the Australian market is trading up. Sometimes you'll see confluence with all of them where all Asian and European markets as well as Australian are trading down, and so you know that the US markets will be trading down, and so you can make it your top priority to short calls. But here we have a little bit of riffraff and some sort of kind of noise, and so what I'm going to rely on mostly now is just my technical indicators and obviously price, like I said. So that being said, I will wait and pause this recording until I deem it a good time to enter position, and then at that time I will keep recording again. Right now what I'm thinking is, since we opened up, I need to find a good position, a good time to enter a vertical put spread, unless we make a lower low, in which case I'm going to wait for a correction or a retrace and enter a vertical call spread. But yeah, you guys will see what I do momentarily. Okay guys, so over here on the 3 minute, it looks like the oscillators, the stochastics, want to turn back up. The 5 minute stochastics are already up, 10 minute stochastics are looking to cross, and then the 15 minute stochastics are down, but they might be losing momentum. On top of that, with the S&P futures, it looks like these stochastics are looking to turn back up again. So what I'm going to do now is I would recalculate the implied move here, but since price right now is at around the same level that the market opened at, it's just going to be about the same. So I'm going to see how much I can get for in credit if I sell put spread for around 2,500. I'm selling a put spread right now because with these stochastics looking to turn up, I believe price will generally go up in this direction. If not, and if I'm wrong and it goes back down, then I'm going to look to manage my risk around this area, close out the position, and then re-enter at a lower strike. Okay, so let's take a look at how much they're going for. I will sell a vertical spread around the 2,500 area. I can get 75 cents for it, which, if you know about options, it's multiples of 100, so it's $75. Let's see, what do I want to do? 24.90, 24.95. Okay, yeah, I will sell 5 contracts. 24. Okay, let's look at the exponentials. So we have the 15-minute 100 exponential coming in at 25.20. Let's look at the 20-minute exponential. We got the 20-minute 200 exponential coming in at 25.14. Okay, look, it's selling off right here. So we did make a higher low on the 10-minute, as yeah, on the 10-minute. Yeah, okay, let's do it. So 24.95. What do I want to sell? What do I want to sell? Yeah, are the 3-minute gonna go back down? Yeah, I'm gonna wait a little bit. Actually, I don't want to front run the 15-minute stochastics because it's made my life difficult in the past. Yeah, 10-minute wants to come back up, but it still hasn't crossed just yet. So I'm going to wait a little bit here. At 65 cents for 24.85. yeah, I'll wait a little bit. Patience, I've found out, helps quite a lot in this game, and it can keep you from having to make tough decisions. Let's see where the 5 minutes going. Okay, the 5 minute, it looks like the upwards momentum might be, we might be losing momentum. Yeah, if it takes out this, the low of this candle, then I will wait. Okay, yeah, it's taking out the low of this candlestick right here, so I will wait. I think it's a bit premature because price could go down further, and it could probably get a better price for a further out strike, so I will wait a little bit. Okay, so that last 5 minute candle, it took out the low, but then it closed green with some continuation. We got the 8 minute in the S&P 500 futures and the 10 minute S&P 500 futures. The stochastics are turning up. Along with that, the 10 minute stochastics in the regular S&P 500 have turned up as well. So I will go ahead and sell some what do you call it? Some puts, a vertical put spread. Okay. Let me, for demonstration purposes, I will recalculate the implied move at this point, because it can change quite a bit due to changes in volatility. So since price is moving so fast, I like to screenshot it. We have the S&P trading at 2561.15. The at the monies will be 2560, going for 26.3 and 27.7. So, and then the puts are going for 2410 and 2530. Okay, so we have this right over here. Yep, it's about the same. And then this is a little lower. Okay, so yeah, I'll go ahead and see now how much I can collect for a far out of the money spread. 2480 is going for 65 cents. 2490 is going for 85 cents. Okay, this is interesting. The 5 minute looks like it's crossing downwards. Okay, the 15 minute is still pointed down. Yeah, I will go ahead and sell the 2485s for 60 cents. I'll sell 5 contracts of that. Do I want to? Yeah. And what I'm going to do, well, I'll explain. Let's just see if we can get in first. Come on. Is price moving away from me? Yeah, it's moving away. What can I get for the 2490s? 60 cents. 2490 will be around here. We got, okay. Yeah, I'll sell the 2490s. So I'll sell 5 contracts of that. Come on, man. Okay, I'll lower my bid to 55 cents. Oh, man. Okay, there we go. So I sold 5 contracts for 55 cents. I'll mark that over here with the cyan. The 2490s, was it? Let me see. Yeah, 24.90. Okay, now what I'm going to do is, if okay, that was a good sell. So if price goes down, let's say if it takes out this low, then I'm going to look for, okay, if price takes out this low right here, then I'm going to wait for the stochastics to pull back up and then close out that position, and perhaps wait for price to get lower so I can sell more further out of the money, and then this will be my absolute danger critical area. If price gets down here, I just close it no matter what, because I will just be at too high of risk. And then I will look for another strike further out of the money to reshort the puts. Right now price is going in my favor, so it's moving upwards, and what I will do then is wait for a pullback. So you can see the 5-minute stochastics going up. I will wait for a pullback. So what I believe is going to happen, and I could be wrong about this, is it'll pull up, this will pull up, and then it'll correct and make a higher low around here, at which point this will come down and then bounce back up. So it's going to be at this point right here that I will add another 5 contracts to my position, because you always want to cut your losses fast and add to your winning positions. Okay, so now it's just a waiting game. Yeah, we can see that the 10 minutes are turned up, the 15-minute stochastics will be turning up very soon, and then everything else is on its way up. Yeah, don't worry about this. Right now I'm profiting $37.50, $25, but that's all based on how much I can buy back these contracts for. Okay, let's go ahead and I was going to recalculate the implied move once again, but I'd like to wait until I'm ready to enter another position. Okay, so I'll pause this recording and continue shortly. Okay, and we're back once again. Price is moving in my favor quite rapidly. I thought it would make a higher high, come back down and make a lower low, but instead it's just pumping. So it's great for my current position, but I also wanted to add on 5 more contracts, and I don't know if I'm going to get much of a chance to get in at any better of a price than I will now. Let's see, looking at the 15-minute exponentials, we got it coming in at 25.23, and I'm all the way at 24.90. So I will go ahead and add, if I can add in, oh man, yeah, price is moving away. If I can add 5 more contracts at around $20 to $25 per contract, I'll be pretty happy. So let me put that order in right now and see where that takes us. Okay, yeah, it's trying to wait. Yeah, I think I'll be able to get filled. Yeah, because I thought that we would make a higher high, it'll come back down, make a higher low, and then come back up, but instead it just keeps shooting up. So, wow, yeah, 12.5 cents. Let's see if I lower my bid to $20 to 20 cents, if I can get filled. Okay, there we go. Got filled for 20 cents, 5 contracts. So, if price stays above 24.95, then I will be collecting $375 from the put side. And then now it's just a waiting game. I'd like for the 15-minute stochastics to top up, and at that point I will enter a call spread. Let's recalculate the implied move, because it'll help us manage our risk better. So we got price trading at 25.89.98, which means that at the monies are trading for 23.30 and 24.40. And then on the put side, it's 24.10 and 25. Oh, 24.10 and 25. Okay, so let's chart that. So orange signifies the implied move, and then the light blue is the is my position. Okay, so and then I enter it in to where, like, so I have the cyan line coming in right here because that's the time that I entered. I have the orange line coming in here. It's because that's when I calculated the implied move. Yeah, okay, so I'm happy with that entry. Price is going in my favor. So far I am up $125 for the day out of the 375 that I can make. Let's see. Yeah, so by recalculating the implied move, it gives me another area to manage my risk. So if price does manage to come down to this level today, then that's when I have to sound the alarm and start being on high alert. Wait for the stochastics to come back up if I want to close it, or if it just bounces right off and then shoots up, then I can hold on to it. Since I'm since the more time that goes by, the less the options are worth due to theta time decay. Yeah, for those of you who are knowledgeable in options and how they work, this should all make sense. If not, then just look it up. Alright, so that's it for now. We got 10 minutes stochastics topping up, 5 minutes are topped up, 15 minutes are on their way up, and so I will wait for this to top up and look for an area to enter a good time to enter a vertical call spread. Okay guys, so I am $275 in profit out of the 375 that I can make. I will more than likely just hold this. I don't think price is going to get down here. Right now 10 minutes stochastics are topped out, 15 minutes are up there about to turn down. Okay, so normally, based on my system, I would short some call spreads here, but the thing is, during up days, there's been a lot of fuckery at the last minute, like with big pumps at the very last hour of the trading day, or very last 10 to 15 minutes. As you can see, what happened right here. Let's see, it happened right here. It happened where else? Happened right here. Here especially, I was able to get out of this one just in time. So what I'm going to do then is look at the higher time frames, like the daily, which the 21 exponential is coming in at around 2650. So that could act as resistance, but this right here can be considered a test of it, and I don't know if I'd want to short this on the second test. Let's look at the hourly. So we got the hourly 200 exponential coming in at 27.35, but I don't think we'll be able to get much premium at that level. Yeah, it's not trading for anything right now. This makes it tough. Let's look at the 30 minute. 30 minute, there's nothing up there. 45 minute, we got the 200 coming in at 26.66, so 26.65, we can get $35, 35 cents. Yeah, I've been so shell-shocked by those days of recovery that it's hard to want to short. Let's calculate the implied move real quick. Delete that. We are trading at 2,600. Oh no, wait. Let's get that again. Okay. So we're trading at 2601.79. The 2600 strike is going for 19.5 and 2060. And then the puts are going for 18.2 and 19.3. Okay, so according to this, the implied move will take us here as the level of support, and resistance is there. So if I short above 2640, the question is, will that hold safe? If I, let's say, do 2660, man, this is tough. Yeah, 45 minute is still going up. Let's look at how the 30 minute just crossed up. It looks like it's trying to come up here. 3 minute just popped up. 5 minute is on its way down. Let's take a look at the 20 minute stochastics. Yeah, this 20 minute stochastics are on their way up. I could enter for 5 contracts, but I just don't like it. Like I said, just because of all the fuckery that's going on. Where are we at on the weekly? Okay, so we got the weekly 200 exponential coming in at 2665. You can get 40 cents for that. 25 cents for the 2670s. Yeah, this is a situation where I'm going to hold off because based on my experience, okay, so there's 4 hours left in the trading day, and based on my experience, there's a lot of big movement that happens in the last couple hours of the trading day, right around 2 p.m., even as early as 1:30 p.m. So I'm gonna see where this takes us. My personal rule is that I don't enter in the opposite side of the trade until like earliest is 1 p.m., 1:30 p.m. of the trading day, because there's just so much shit that can happen. So I'm gonna hold off on this, even though I can collect some okay premium from shorting up here. I just don't want to get caught in a bad place. If for example I short up here and then price, I would manage my risk at around these levels right here. But if price does get to that level, then I will be buying back my short call spread for a pretty high price to where I'd be losing a significant amount of money because it's so close. So yeah, what I think likely would be a better option would be to wait for these, perhaps wait for these 10 minutes to go down and then pop back up, but I don't know if that's going to happen. Yeah, I just don't like the just doesn't feel like a favorable scenario for me based on how I've seen price just shoot up at the last 10 minutes of the day. I've been caught with my pants down in that situation and have lost a lot of money from it. I will go ahead and reassess in another hour or two, but I just wanted to provide my thoughts on this for you guys. I'm pretty happy with my short put spreads, and I may just leave it that way, depending on how things go. So we'll just have to wait and see, because if this is a lower high compared to this, then I would have been missing out on some money by shorting these. But if we make a higher high, then yeah, it's I'll be in a tough situation. According to the stochastics, we do have hidden bearish divergence with a higher high here and a lower high here. But yeah, I'm just gonna wait. Yeah, it's a tough spot. It's a tricky spot for me. I know a lot of people will probably do it, but it just doesn't feel right to me. I'm not comfortable doing it. So whoever's out there, if you're listening, if you think I'm a pussy for not taking the trade, so be it. Like I said, it's just not something I'm comfortable with at the moment. Okay, so the 15-minute stochastics are on the way down, 10 minutes are on the way down, 5 minutes freshly crossed, and 3 minutes are already down. I think for demonstration purposes in this video, I will sell some calls. Let's calculate the implied move once again. Where are we at? 98. So 25.98.16 is what we're looking at. 25.98.16. And so the 2600 strike is selling for 15 and 16 at bid ask, and then 16.9 and 17.9. Okay, so let's mark those areas off. Whoa, what? Oh, there we go. Okay, so it's showing the resistance over here and support right here. Just because I don't feel as comfortable selling calls on an up day, I'm gonna sell for pretty far out the money. Let's see, far out the money, and for a lower premium. So 2670 is selling for 20 cents. I'll just sell 5 contracts of that, and then keep an extremely tight stop. I might be regretting that actually. Yeah, see, looks like it wants to come up. Yeah, I'm messing around with the parabolic SAR right now, and it's firing off a sell on both the 5-minute and 10-minute. Yeah, so I'll go ahead with this again and keep a close. Okay, 65 is going for 20 cents, which is up here. And this is so tough because I'm just not comfortable with it at all. Do I sell the 65s? Do I sell the 70s? It's trying to come up. 3-minute is crossing. It is about to cross up. Oh man. if we look at the single orders, we can see that the probability of touch for the 2670s is about 8%. Wow. Yeah. I've been trying to figure out what to do all evening, but like the situation just is not conducive. Ah, man, what do I do? What do I do? I feel like it's going to consolidate here. The stochastics will hook back around and then it'll come back up just based on how it's behaving. It'd be easier if we had more exponentials up above that we can use as a guide to manage our risk for areas of resistance. Yeah, see, this is just shooting back up. You know what? I am going to play it safe and not get greedy. There's 2 hours left in the trading day. Let's see. Yeah, it looks like it wants to come up. And then I'm just so worried it's gonna shoot back up. Like, if you've played this game long enough, you've seen that happen so many times. Like, right here. Let's see, right here. Where else? Right here. Right here. Right here. Let's see, right here. So how many times is that? It's the 20. No, it's the 30th right now. And in the last month or so, it's happened 1, 2, 3, 4, 5, 6 times. That's way too, like, oh, here. Can this count? No. Yeah, it's just here. 7. It's just getting way too close for comfort, even though this does look a bit distribution-y, with the rounded top. Man. Well, I'm going to explain what my position looks like at the end of the day, if I were to take this trade. So I have 10 contracts sold on the put side, and then if I was to sell 10 more, this is what my graph would look like. So if I was to sell the 65 strike for 25 cents, then I'll be taking home $625 at the end of the day by capturing this range right here. Without it, I'll be taking home 375, and I'm not worried about the loss because, like I said, I'm actively managing my risk and closing out positions that I shouldn't be holding if it gets too close to in the money. I'm leaning more towards just calling it a night and yeah, just playing it safe. But it's so hard. I really want to I feel like there's money on the table to be made. How long is this wick on the downside? It's 0.27%. Yeah, I really just feel like it's gonna come up. And we haven't even tested this upper area from the market open. Yeah, you know, I'm going to play it safe. We got the quarterlies expiring tomorrow, so I'll be able to trade tomorrow as well. It's it's just not worth the risk of all the fuckery going on. So with that being said, I hope this video finds you well. I hope it helped out. If you have any questions at all, please feel free to leave them in the comment section below. Let's see what else. I'll provide links to TradingView and Thinkorswim if you guys would like to sign up for it. In full disclosure, they will be affiliate links. And what else? Yeah, if you'd like to see more of this and see more of my strategy and what I'm thinking, let me know. I think I'll film another one tomorrow just because this is what I'm doing almost full time now. On top of running the channel, just because like we're locked in because of coronavirus. So what the fuck else is there to do besides make money? Anyways, hope you all have a good day. Don't forget to subscribe and like this video, and I will talk to you soon.